All right, what is infinite banking? Let's talk about it right now. Okay, so what is infinite banking? How does it really work? Like, what is all this hype all about? Especially because it's going big on YouTube. I want to dig into about what it is in a very simple way instead of all the confusing crap you see out there right now. So let's dive in. All right, so let's talk about infinite banking right now. What is it? Now, if you look up stuff on YouTube and everything else, you see like Nelson Nash and Be Your Own Banker, and that's exactly it. Nelson Nash Institute, those guys are like the creators of this quote unquote infinite banking concept, the term of it. However, this strategy has been used for years and years, really over 100 years, maybe longer, but definitely in the last 100 years, it's been widely known. Now, when I say widely known, it's not among normal Americans, it's actually more known among bankers, right? Banks would use this all the time, or business owners would use this often, because back in the day, believe it or not, although the stock market still existed, a lot of people didn't trust it, especially after the Great Depression. After the Great Depression, people said the stock market is a joke. I don't know if I want to be in that sort of thing. And so the only option when it came to life insurance, by the way, did you know that term insurance has only been around for like less than 50 years? Whole life insurance was the only kind of insurance that was in existence, and companies, as well as individuals and banks, would actually use whole life insurance to put their money into. So infinite banking, when they're talking about it, it's using a whole life insurance policy, but understand it's not the death benefit. This is not like term insurance where there's just a death benefit, right? There's a living benefit. There's this tax-free, high-yield savings account inside of these life insurance policies. So yes, you get the death benefit, but you also have this tax-free savings account inside that grows money inside. Now, what people can do with this money, that's where this infinite banking concept comes in, because now you can leverage that cash to use for your benefit. This is your money. It's literally like a savings account. You can withdraw it, or you can get a line of credit against it where you can borrow the money from the insurance company. Now, someone might say, why would I borrow my own money? Because you don't. You don't borrow your own money. What you're doing, you could, again, withdraw the cash out, but what happens when you withdraw cash out of this versus like any savings account? You withdraw the money, it's out. Are you earning any more interest in that savings account? No, you're not, right? So the other option is, what if I were to get a line of credit against it? For example, you can actually walk into a bank right now. If you have a savings account sitting there, you could say, hey, Mr. Banker, can I get a line of credit against my savings account? And you know what that banker will say? Oh yeah, of course. Right? Because they know what they're going to do. They're going to lock up your money, they're going to lock up your savings account, and then they'll give you the line of credit. As you run up that line of credit, then that savings account gets locked, right? So let's just say that you have $25,000 in there. And I'm saying that number because I literally had done this 20 years ago. So I had $25,000 in a savings account. They open up this $25,000 line of credit. The savings account was still there, but once I ran up that line of credit, they locked that amount in the savings account. They said, you can't touch this. Nuh-uh. And I'm not going to quote MC Hammer, although I guess I just did. All right, well anyways, I'm not gonna sing it for you or rap it for you because I can't do either, okay? But that's the thing, is like they locked up that amount of money. So if I borrowed $5,000 from them, they would lock up $5,000 in that account. But understand the $25,000 still in that savings account, still earning interest. It's still earning their compounding interest at the bank's level, point nothing percent, right? So I'm still earning the money there, but I have that line of credit. If I use up all $25,000, they lock up all $25,000. Now as I pay that $25,000 down, let's say I pay $5,000 of that loan off, it frees up $5,000 in the savings account that I can get to, right? So that's how it works. They give you a very low interest rate because they know it's got the collateral behind it. It's secure for them. They know they can't lose it. If I stop making payments, like, because when I do charge up over there, that's the thing with the bank, they will charge you monthly payments. If I don't make a monthly payment, if I go late, guess what? They just shut down that line of credit and pull all the cash that I owe them out of that savings account and pay it off. Here's the good news. With life insurance, it's much more flexible. It's safer because once again, when they give you the line of credit, it's a private loan. It doesn't show up in your credit score or your credit report for that matter. It's not even, in fact, you could have a horrible credit score and still get the line of credit because they're paying you the interest, they're paying you the money, and they're paying you much better than what the bank does. Right now, they're paying like 6% a year dividends currently. Now, they might loan it to you like 5.5%, 6% or so, right, on that money too. But they won't have a minimum monthly payment. Also, the deadline for paying back those loans, because they pay you so much, the deadline for paying back those loans is your death. And they just take it out of your death benefit from the life insurance instead of just your cash. So that's really a cool thing. So understand that that's kind of how it works. Now, people call it infinite banking because they say, because I can access this money, I can borrow from the insurance company. Well, I'm still earning money over here. What if I use this money to pay off bills? Now, I don't recommend this for a bill pay, just so you know. I'm not a big fan of that. But I do recommend it for using it for things that you maybe can't get good money for. For example, if I can get a bank loan for a mortgage at, say, 6%, 7% right now, I'm going to do that all day long because I want to get the bank's money in my possession. But that down payment, the bank doesn't lend me money for, do they? So if this is an investment property, I have to put at least 20% down. So if I can't, I could pull out cash from checking, sure, but I can actually borrow from the insurance company because I've got cash over here, assuming I've got more than what the down payment is, right? I can borrow from the insurance company, use that money to go put the down payment on. Now, why would I do that? Because I'm going to take the cash flow from that investment property and use it to pay back towards that line of credit, paying it down. But again, the cool thing is they're paying me not just better interest in the bank, but it's tax-free because life insurance money grows tax-free. So I'm able to use this money back and forth. That's basically what the infinite banking concept is that you use that money that you probably would just use for cash anyways, right? Because some people go cash only, especially the Dave Ramsey fans. They're like, no debt, never use debt. Well, this would be the option where you could be using debt, even though it's not really debt. Because once again, yes, you're borrowing from them, but the money is secured. You have the collateral still there. You're just using money differently so you can make money in two places at the same time. Because what happens is you take that money and you using that cash flow, that investment property to pay the loan down, you get charged less and less in interest from the insurance company. But at the same time, because your money's in there, they're compounding interest more and more each year. So let's take an example here. Let's just say that you had $100,000 in your life insurance policy that's in that cash savings account. Now you want to borrow $50,000. You use that money to go and you invest and put it as a down payment on a property, right? Now that $50,000, what you're going to do, of course, you're going to start paying that back with the money coming in from the rental. So let's just say that you're earning like $400 a month or $5,000 a year that's coming in. Well, your $100,000 is still in there. It's still earning that 6% tax-free compounding. So the next year, you made like $6,000. But guess what? When they charge you, say they charge you 6% as well on that $50,000. If it was just left at $50,000, you'd be charged $3,000. You would still make $3,000 more over here. But guess what? If you pay down that $5,000, say it gets down from $50,000 down to say $47,000, now you're only being charged 6% on $47,000. The next year, it pays down to say like $44,000, right? The next year it pays down to $40,000. So you keep doing that. The next thing you know, you're like, oh, I'm only being charged now like $1,200, but over here it keeps compounding. I'm making $6,500. So what happens is you make more and more money here while paying less and less interest here, and you're still earning the cash flow from the property. You're literally making money in two places at the same time. You're earning interest in the account, and you're still making the cash flow from the property. Plus, when it's investment property, if it's appreciating and doing all those other things, you get tax benefits, you get to keep it all. Okay, so now I don't want to get too much in the weeds, but here's the thing with infinite banking. It's just another way to use your cash in a smarter way. Because the truth is, most people are not really impressed with their bank anyways. They use checking account money. Yay, I make nothing on that money that just sits there. And they worry about inflation, so they gotta use it to invest or do something with that money. Yeah, well, what if I could be earning more on that money, earning more interest, and it's tax-free, and I can also be making money with that money too. Now you're able to make money in two places at once. You become the smartest person in the room. You start doing things that most people don't understand unless they're wealthy. And that's the key here, is that infinite banking is something that's been used by the wealthy for so long, but yet is still available for someone like you to use now. But it requires you to actually take the steps to learn more about it. If you want to learn more about infinite banking, go to our website, moneyripples.com. There's a whole infinite banking section to show how you can even use that money to make money in two places at once, and even be able to use that money protected from lawsuits and creditors and all kinds of cool stuff. Even retire early using that money. Check that out at moneyripples.com.